Hey guys, welcome back to another video. Today I'll be going over my trade on oil today, US oil, and how I did my analysis to come to the conclusion that price was going to be bullish today. All right, so I'm going to start with the daily time frame. The first thing that caught my eye was the fact that an old low on oil was taken. So this low was from June, I believe. Yes. And that low was taken. So that's a significant liquidity purge. There was divergence here because that same low at the same time was not taken on New York Harbor Oil. And on RBOB, the low was taken. On Standard & Poor's, the low was taken. So there was divergence with the New York Harbor Oil as is opposed to the other pairs that we're comparing to, right, or contrasting. Uh, So that was the first sign that we had bullish divergence. But obviously, we don't want to be taking trades from this time frame. So going to the lower time frame, even if you look from the daily too, actually, you can see it. Let me just show you quickly. All right, so as I had said I had made a post in the Telegram chat where I was saying that this week has been low probability in terms of the price action that we're getting. Price is mostly in a range, and that is mainly because it's the first week of the month. You tend to expect that price action in the first week. You don't really get much movement. If you do get movement, it's because of news drivers, right? So lackluster price action expected, but at the same time, it doesn't mean that we never look for a trade, right? So if the setup is presented and all the boxes are checked, then I can't see why we can't take the trade. So that's exactly what happened today. So all throughout the week, really, except yesterday, we had lackluster price action. So nothing was to be done. There was nothing to do on gold, which is the pair I usually trade. So I was looking at oil, and there was this divergence here. You're seeing this is Tuesday's low, and this is Wednesday's low. Wednesday did not take Tuesday's low on WTI oil, right? On New York Harbor Oil, the same thing happened. There was no liquidity purge. But on RBOB, we had a liquidity purge on Tuesday's low. So that again is SMT divergence. Similarly, on S&P, Standard & Poor's, there was no liquidity purge. But what we really want to see is the divergence on any one of the pairs so that we know it gives us an indication as to where price is heading, right? So we have that larger cycle SMT, and we have that, now we have this daily cycle SMT. So going down to the 1 hour time frame, how do we get into the trade? Right? So that's the question. All right, so looking at today's price actions, even coming from yesterday's what we would say assumption, because of that SMT divergence, that bullish SMT divergence, we know where price is going up. Looking at the usual markers, which is the high and low of Monday, so that's what the green lines represent. Price remained inside that box for most of the week up until yesterday. So there were no extreme, what would say, extreme ends that were taken out during the beginning of the week. So let's get this properly set. All right, so looking at today's price action, this low was created on Wednesday during New York. This low was created today in London, basically just outside of London, right? So looking at what price actually did, We had a breakout of Monday's high, a retest, and a continuation, right? That continuation, we had a pullback. The pullback didn't take out this retest low here, because that's a significant low. And on this, the New York Harbor Oil, there was really no purge either. The purge happened on the Standard & Poor's asset, which showed the divergence among all of these assets. And that would have been the signal to be looking for buys, right? So having seen that at time with this one, around 5:30, right? So coming to New York, let's look at the 5-minute time frame. Right, so that this represents where my entry was taken today. But let's look at how that was done and why. All right, so this is the 5:30 low. Yes. All right, so coming into New York, as I was saying to earlier to somebody else, I've noticed with oil that the setup for the trades either happen at 8 a.m. in the morning or 10 a.m. in the morning. So inside of New York, but either 8, you'll see that setup that where prices expands rapidly, or at 10, you get the same type of setup. So the timing is important in terms of waiting for your trades. And we had some, I would say, consolidation at the beginning of New York. So there wasn't much to do. So having seen this expansion here, broke structure here, waited for the retest, and once price started to break this 10-10 candle, I placed my entry, and there it went. So it was after 10. So I was watching, I was late for the 8 o'clock to watch 8 o'clock, but I was watching for the 10 o'clock to see what would have happened, having seen that there was consolidation before and a slight expansion. And that was the signal to enter after the engulfment that was taking place here. And that was the entry. It was about a 1 to 7, and it was a good trade. But that's basically the breakdown and the thought process behind getting to taking the trade, despite having a really low probability week in terms of trading. There was something to do today, right? So as usual, if we're patient and we just follow the rules that we have set for ourselves to enter the trades, then we shouldn't be in much trouble when we do enter trades. Not saying I've never lost a trade, because that's a part of it, but yeah, just follow your rules and you'll be good, and always maintain good risk management habits. So that was that. I still think oil is bullish based on that higher time frame perspective, but they're always short-term trades, so we'll see how that goes. Thanks for watching and have a good rest of your day.